don't know what Guinness prices contributed to the UK inflation print.
It's all seems to be breakfast related by what I've seen.
Oh, marmalade. Guy's been on about marmalade this morning.
Yeah, coffee, marmalade, meat, all the sorts of things, that will bring back the breakfast index. Dan, how worried do we need to be about the price of breakfast? You can answer the question more seriously about how worried we need to be about the inflation.
It just puts me in an awkward place when you make a joke and I don't know how to respond. Look, I think if you look at it, take it at face value, it was obviously a little bit hotter than the consensus expected. It was a little bit hotter than we expected. It was in line with what the Bank of England expected, though, and I think that's a very key point around this release when you're thinking about what they may or may not do next. And if you look underneath the surface, what drove this pickup? Well, it's a couple of things. One is food, as you guys have just mentioned. But the other two things that drove the pickup were accommodation prices and airfare prices. Now, they're two things that the Bank of England has historically been quite relaxed about. So I think if you bring it all together, we're in a very the Bank of England is in a very uncomfortable position with this. But I also think you've got to remember that wage growth is coming down. The labour market is loosening. Growth was strong in the first half of the year, but it looks like it'll be a little bit weaker in the second half of the year. So I don't think, it doesn't make their job any easier when it comes to what they're going to do, particularly over the final three meetings of the year. The final thing I'd add into that, of course, is what happens in the budget and whether we do get tax rises as we think are likely. That obviously makes the case at the margin for slightly looser policy too.
Yes. How does this number we had out today, which is higher than the previous month, how does it fit in with what the Bank of England themselves were expecting to see? Because I think you were telling us yesterday, Dan, that the BOE had a slightly higher number penciled in for inflation today than the broader estimate. But I wonder on services specifically, I mean, that 5% handle on services, that's an awkward sort of sticker price shock, isn't it?
It is. You're right. I mean, the bank so for headline inflation, the bank had 3.8, so it hit their forecast. On services, they had 4.9, so we had it slightly higher. I think it's impossible to know, but I think the surprise will probably be when we sort of read the minutes of their meetings and things like that. We'll find out that the surprise was related to airfares. So as I say, I think they'll be relatively relaxed about that. And they're always, when airfares spike up, it's because of the timing of the school holidays and when the ONS collects the prices. More likely than not, they'll fall back over the course of August and September. So that's a one-off, if you like, and it'll come out of the annual numbers in coming months. But you're right, and the whole sort of story here is that the bank has made, with various bits of research, the bank has made quite clear that the 4% handle on inflation is a handle or a level that households become more attentive to what's going on in the inflation picture, and that's the thing that they're worried about, is that households and firms as well respond to the high inflation environment by thinking that 4% is the new normal and not 2% is the new normal, and then we do get this self-fulfilling dynamic, and we end up in a world with much more persistent inflation, which is what happened over 2022 and 2023.
And I mean, how likely does a repeat of that look at this stage?
So it's not our base case, and I think there are a couple of things to point to that give me reason to be a little bit more optimistic on that front than you would have been, say, in 2022 and 2023. The first is that the labour market is much, much looser. Now, the labour market was extremely overheated in 2022 and 2023, and that gave workers that was a backdrop in which workers were able to bid up wages. The labour market is much looser now. It's somewhat probably below full employment, not much, but a little bit below full employment. But we've come a long way over the past sort of 18 to 24 months. The other thing I point to, which I think is very important, is that pay settlements are running at around 3% if we look at year-ahead pay settlements. Now that, if you're an inflation-fighting central bank, is a really good story. The UK UK productivity, we know growth is very weak. But if you look at what level of pay growth might be able to be sustained with 2% inflation, you'd probably say about 3%. So that's going to be a really important story as we get more information about next year's pay settlement.
Okay.
We've had some early numbers on that. That'll be an important story moving into 26 as well.
Dan, thank you very much.